decade of 2020. But I think the pandemic catalyzed the next phase of growth and caused it to mature, and nations, governments, and the like began to adopt Bitcoin as a digital asset. It did. The Fed would do something, then they changed the expectation to, and so institutions have reason to be concerned about inflation between the 5%. That's great, and I think if you combine it with the latest China news. The hash rate on the network is down to 138 exahash, and there was a minus 5% difficulty adjustment down last period, and there's a targeted minus 4.9% difficulty adjustment coming. I think the implication is a lot of China mix toward renewables just in the past 2 weeks. And I think that once we sort out what that means, we'll conclude that the network is migrating to the US. The network is decentralizing further. The difficulty rate is dropped, and that's great news for every existing Bitcoin miner outside of China. A hash, which is 20% of the network, which presumably was, that was a big highlight. I think the developments in Nigeria and Tanzania are highlights. I think that the news this weekend out of Lebanon, that Lebanese have lost 90% of the value of their local currency, and their dollar amounts or dollar balances are frozen by the banking system. I think that punctuates just how important Bitcoin is to the entire world. Everybody feels like this is the idea whose time has come, and we have an opportunity to spread property rights and human rights to 8 billion people around the world. What's clear, asset like Bitcoin, the United States dollar is spreading everywhere. Now, they need a store of value, and they also need a way to move billions of dollars cross-border with a future model of the 21st century digital economy. And that would be billions of people with a digital wallet on a mobile device running on a stable coin. And the other thing that's going to be in the wallet is a digital asset like Bitcoin. Bitcoin gives everybody in the world, and especially in El Salvador, the ability to save their money in an asset that's going to appreciate in value over time. And it's also providing a worldwide settlement and synchronization network that allows anybody in the world to plug their website. They're forced to pay a 10% fee to move money back and forth, or to wait days or weeks. And so El Salvador is the model. And the enthusiasm, the excitement here is because there are billion people, 1.7 billion people that are unbanked. They need the same thing. An Android phone that costs $50, a bank in their pocket in South America. And it'll move on Bitcoin rails. The Bitcoin open monetary protocol. In our environment, money breaks down into two forms. There's a medium of exchange, we'll call it the currency, and that'll be controlled by government. That's an asset, and Bitcoin is the most powerful store of value on earth. I mean that the US dollar is going to spread to billions and billions of people on crypto rail. It's going to need to be plugged into an open digital monetary network, and that network is Bitcoin. So oftentimes people think that these things are both of them spreading to billions of people, because the world needs both. They need a medium of exchange that's compatible. Indicators that the entire world's beginning to realize that Bitcoin is the most powerful technology of the decade, and they're just noticing now. But the truth is, what they realize is that there's 8 billion people on the planet. Eventually, they're going to need an asset with a digital asset and an open monetary protocol, and that is Bitcoin. I do think that Bitcoin is in fact, the most powerful, dominant digital property on Earth, and I think that it's essential if you're going to spread digital currency and digital assets to billions of people.
The times ahead will be radically different from those that we've experienced in our lifetimes, though similar to many times before. How do I know that? Because they always have been. Over my roughly 50 years of global macroeconomic investing, I've learned the hard way that the most important events that surprised me indeed happened many times before, with the ups and the downs of the Dutch, British, and U.S. empires. And every time they did, it was a sign of the debts. That's right, the U.S. ran out of money. How? Well, back then, gold was the money used in transactions between countries. Paper money, like the dollar, was like checks in a checkbook in that it had no value other than it could be exchanged for gold, which was the real money. At the time, the United States was spending a lot more money than it was earning by writing a lot more of these paper money checks than it had gold in the bank to exchange for them. As people turned these checks into the bank for gold money, the amount of gold in the U.S. started to dwindle. It soon became obvious that the U.S. couldn't keep its promises for all the existing paper money, so people holding dollars rushed to exchange them before the gold ran out. Recognizing that the U.S. was going to run out of real money, on Sunday evening, August 15th, President Nixon went on television to tell the world that the U.S. was breaking its promise dramatically without making it clear that the United States was defaulting.
The strength of a nation's currency is based on the strength of that nation's economy. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
I watched in awe, realizing that money as we understood it was ending. What a crisis. I expected the stock market to plunge the next day, so I got on the exchange floor early to prepare. When the opening bell rang, pandemonium broke out, but not the kind I expected. The market was up, way up, and went on to rise nearly 25%. That surprised me because I never experienced a currency devaluation before. When I dug into history, I discovered that the exact same thing happened in 1933 and had the exact same effect. Then, paper dollars were also linked to gold, which the U.S. was running out of because it was spending more paper money checks than it had gold to exchange for them. And President Roosevelt announced on the radio that he would break the country's promise to exchange dollars for gold.
It was then that I issued the proclamation providing for the National Bank holiday. And this was the first step in the government's reconstruction of our financial and economic fabric. The second step, last Thursday, was the legislation promptly and patriotically passed by the Congress, confirming my proclamation and broadening my powers holiday and lift the ban of that holiday gradually in the days to come. This law also gave authority to develop a program of facilitation.
In both cases, breaking the link to gold allowed the U.S. to continue spending more than it earned, simply by printing more paper dollars. Since there was an increase in the number of dollars without an increase in the country's wealth, the value of each dollar fell. As these new dollars entered the market, without a corresponding increase in productivity, they went to buy lots of stocks, gold, and commodities, and hence caused their prices to rise. As I studied more history, I saw that the exact same thing happened many, many times before. I saw that since the beginning of time, when governments spent much more, so they printed more, a lot more, which made its value fall and made the prices of most everything, including stocks, gold, and commodities, rise. That's when I first learned the principle that when central banks print a lot of money to relieve a crisis, buy stocks, gold, and commodities because their value will rise and the value of paper money will fall. This printing of money is also what happened in 2008 to relieve the mortgage-driven debt crisis, and in 2020 to relieve the pandemic-driven economic crisis, and it almost certainly will happen in the future. So I suggest that you keep this principle in mind. These experiences gave me another principle, which is to understand what is coming at you, you need to understand what happened before you. That principle led me to study how the Roaring '20s bubble turned the lessons that allowed me to anticipate and profit from the 2007 bubble, turning into the 2008 bust. All these experiences led me to develop an almost instinctual urge to look to the past for similar situations to learn how to handle the future well. Changing order. What happened in my lifetime prompted me to do this study. First, countries didn't have enough money to pay their debts, even after lowering interest rates to zero, so their central banks began printing lots of money to do so. Second, big internal conflicts emerged due to growing gaps in wealth and values. This showed up in political populism and polarization between the left, who want to redistribute wealth, and the right, who want to defend those holding the wealth. And third, increasing external conflict between a rising great power and the leading great power, as is now happening with China and the United States. So I looked back. I saw that all these had happened together before, many times, and nearly always led to changing domestic and world orders. The last time this sequence happened was from 1930 to 1945. What exactly is an order, you might ask? It's a governing system for people dealing with each other. There are internal orders for governing within countries, typically laid out in constitutions. And there is a world order for governing between countries, typically laid out in treaties. Internal orders change at different times than world orders, though whether within or between countries, these orders typically change after wars. Civil wars within countries, international wars between countries. They happen when revolutionary new forces defeat weak old orders. For example, the U.S. internal order was laid out in the Constitution in 1789 after the American Revolution, and it is still operating today, even after the American Civil War. Russia got rid of its old order and established a new one with the Russian Revolution in 1917, which ended in 1991 with a relatively bloodless revolution. China began its current internal order in 1949 when the Chinese Communist Party won the Civil War. You get the idea. The current world order, commonly called the American World Order, formed after they emerged as the dominant world power. It was set out in agreements and treaties for how global governance and monetary systems work. In 1944, the New World Monetary System was laid out in the Bretton Woods Agreement and established the dollar as the world's leading reserve currency. A reserve is a key factor in a country becoming the richest and most powerful empire. With a new dominant power and monetary system established, a new world order begins. These changes take place in a timeless and universal cycle that I call the Big Cycle. I'll start with a quick overview, then give you a more complete version, and then direct you to my book if you want more. As I studied the 10 most powerful empires over the last 500 years and the last 3 reserve currencies, it took me through the rise and decline of the Dutch Empire and the guilder, Empire and the dollar, and the decline and rise of the Chinese Empire and its currencies, as well as the rise and decline of the Spanish, German, French, Indian, Japanese, Russian, and Ottoman empires, along with their significant conflicts, as measured in this chart. To understand China's patterns better, I also studied the rise and fall of Chinese dynasties and their monies back to the year 600. Because looking at all these measures at once can be confusing, I'll focus on the four most important ones: the Dutch, British, US, and Chinese. You'll quickly notice the pattern. Now let's simplify the form a bit. As you can see, they transpired in overlapping cycles that lasted about 250 years, with 10 to 20-year transition periods between them. Typically, these transitions have been periods of great conflict because leading powers don't decline without a fight. So how 8 metrics? Each country's measure of total power, technology development, competitiveness in global markets, economic output, share of world trade center for capital markets, and the strength of their currency, how strong each country is now, was in the past, and whether they're rising or declining. By examining the sequences from many countries, we can see how a typical cycle transpires. And because the wiggles can be confusing, we can simplify it a bit to focus on the pattern of cause-effect relationships that drive the rise and decline of a typical empire. As you can see, better education typically leads to increased innovation and technology development, and with a lag, the